$5 billion is how much the cost of currency convertibility that we've identified is a cost to Africa's economy. That means $5 billion worth of jobs, $5 billion worth of competitiveness, $5 billion worth of efficiency forgone as a result of us having 42 currencies. And so we are making this an example of the tools that are required to enable the AfCFTA to be commercially effective and to make sense for the private sector and small and medium enterprises.
It's interesting you talk about $5 billion. There's an interesting statistic Professor Benedict Tarama, who heads the AfriExim Bank, who's supporting the PAPs, as you just mentioned, talks about, which is this idea that every week African buyers spend $5 million a week trying to source inputs in China.
Yes.
Per week. So when you think about it, the AfCFTA is also about shifting the eyes of the African buyer into the continent, but that means there will have to be a huge production drive. And so I'd like to talk about investment, because you've also spoken about investment quite a bit. You know, the AfCFTA is obviously first an opportunity for African producers of goods and services, but it's also an opportunity that will take off when we get the FDI connection right. So I'd like to hear your thoughts about investment in the context of the AfCFTA, precisely because, as you know, investment is the first cousin of trade. What is the role of investment in the AfCFTA?
We are in the last few months of negotiating a protocol on investment protection. We think that the starting point should be to protect not only foreign direct investment, but intra-Africa investment. And so we're establishing rules for how investors should be treated. When an investor enters a particular market within the AfCFTA zone, what minimum standard of legal treatment should they expect? Due process, access to judicial processes that are fair and just. All of these things are very, very important to create investor confidence. For the first time in Africa, we are creating a continental platform, a continental legal instrument for investment protection. We will complement that with a dispute settlement body or mechanism, which is also intended to make sure that any disputes that arise, whether in investment, in competition, that are covered by the scope of the AfCFTA, that these disputes are adjudicated and resolved according to rules which we as Africans have agreed to, that nobody has imposed on us. And so these two components, the dispute settlement mechanism, which is the first of its kind on the African continent, as well as a protocol on investment, I hope will encourage investors to look at Africa, and particularly African investors, to look at the market in Africa with a different perspective and to have more confidence to invest on the continent. We have already seen very positive signals of investor confidence as a result of the potential for the AfCFTA to create a trading environment, an investment environment that is based on rules, so that businesses can thrive.
Yeah.
So there's a very significant role for the private sector, but first the starting point is for us to create conditions, the legal conditions for investment protection. And that's not something that we can ask the private sector to do. It is something that we have to work on with governments on the African continent.
So there are two tracks to the investment question. There is those countries like the US, like China, like Canada, like all of them, that will want to engage in the AfCFTA space through the FDI route.
Yes.
But there are others that are interested in FTAs, in free trade areas with African countries. Do you see a contradiction there? Do you see a potential to detract from the journey?
Well, the most important thing is for us to focus on implementation of the AfCFTA. We started this journey at the beginning of the COVID-19 pandemic. So you figure 2.5 years is when, in earnest, we started the process of implementation of the AfCFTA. At that time, there were 42 countries in the African continent that were either in a full or partial lockdown. There was no trade, there was no goods transiting borders. Certainly there were no services transiting borders, but we were able to make very significant progress. I make this point because we need more time to consolidate and implement the rules that we are agreeing to. The rules of protecting African investors, protecting African traders. And so, as much as countries are free to negotiate with a third country a trade agreement alternative to the AfCFTA, every country in Africa is free to do so. However, there's a political objective, and the political objective and the political ambition is consolidating the African market, so that once again, as we've heard this morning, this market of 1.3 billion people, we can realize the objective of 15 years from now being a $7.1 or $7.2 trillion combined GDP economy. It is entirely possible where we consolidate and integrate the market. It is entirely impossible if we continue in the balkanization, in the different regional communities, and the different borders that we have been stuck in for the last 60 years. We've learned from the experience of the European Union, the most successful integration model in the world. 72 years ago, the European Union started with 7 countries, 5 or 7 countries, European steel and compact. Today, as I say, it is the most successful model of integration in the world, with a much, much smaller population than the African continent. And so the potential for Africa is really immense where we implement these rules.
So, we're running out of time, but we can't close this conversation without talking about inclusivity. The dream that you espouse will be meaningful if it brings along, not just brings along, but puts women and youth at the heart of it.
Yes.
You just came from a very successful conference on women and trade hosted by Her Excellency the President of Tanzania. What can women expect?
In Africa, over 450 million jobs are created by the small medium enterprise sector, contributing over 60% to Africa's GDP. And the majority of these small medium enterprises are run and led by women and young entrepreneurs. And so it would be ill-advised for us to ignore such an important driver of Africa's economy, of Africa's economic dynamism. That's why we are negotiating the protocol on women and youth in trade, so that we move beyond aspirations and beyond emotional lamentation about the importance of inclusivity, and that we actually do something about it. And so the protocol on women and youth in trade will codify into legally binding obligations all of these aspirations that we have about inclusivity. And so we had a very successful event, the first of its kind, in Dar es Salaam, as you said correctly, under the auspices of Her Excellency the President, where we explored the challenges that women-led businesses are experiencing, young entrepreneurs, the barriers to trade that they experience, the barriers to trade finance that they experience, and we explored also the solutions. What could be the possible solutions to make sure that the AfCFTA doesn't become an agreement that benefits only large corporations, which they should, but also brings along with it, in terms of benefits, brings along with it the most important dynamic economic segments of Africa's society, and that is small medium enterprises and young entrepreneurs.
Well, thank you very much, Secretary General Mr. Wamkele Mene. That's all we have time for. I hope you're as excited as I am. I hope you're as hopeful as I am. Africa is unstoppable, and now we have an engine to make that happen called the AfCFTA. But for that to really happen, given we're at a business forum, you must make those products. You must make them in Africa. And when you do, the promise is that there's this huge market that can buy them. Thank you very much.